Are you making losses while trading and unable to figure out why you are making losses in the first place? You have participated in every type of trading style. You know where to put the stop loss, you know where to exit, but still making losses. Let me help you navigate this phase by sharing some actionable points. By implementing that, you will come closer to profitability. So let me begin this video by sharing that every business has their own system and processes. Hello, I am Kaushik Akiwatkar, former dean and professor and now a full-time trader. Let me begin this video by sharing few thoughts around trading. So when we trade the markets, we don't consider this as a business, whereas trading is a business. So we have to treat this as a business. So when we treat this as a business, we should have system and processes. How system and processes are developed? So as any business, let us take example. Let's say you have seen hospitals, right? When you enter the hospital, you get a very structured approach. When you go to the reception, you ask them, this is your XYZ query, and they address you to the right person, and they connect you to the right person, and then you take it forward. Everybody knows their job there. You participate, you go there in the hospital, you enter the hospital, you have a receptionist, somebody to guide you. They navigate you to the department where your checkup or anything has to be done, and then you have different systems. If somebody is admitted to the hospital, you might be seeing the patient's day-to-day life, right? The doctor comes in at a particular time, the nurse comes in at a particular time, they check their readings, they collect data, evaluate what's happening, and based on it, they evaluate what are the next procedures to be done. If we have to boil it down, they are following a system, they are following a process. In the industry, it is known as standard operating procedure. Every business has its own standard operating procedure. If you take an example of logistics business, they know what they are doing. When your shipment arrives, how it exits, then as a consumer, whether you can track it or not. If you are able to track it, how you are going to track it. So a system is in place. When we come to trading, we don't have a system, we have to create a system. In trading, that system is known as trading plan or a trade plan. Trade plan is a very essential method which is for the trader a defined SOP. For a trader, the SOP becomes the guiding principle, the trade plan becomes the guiding principle. That means which stock you are going to participate, what is your stock universe, in which stocks you are going to participate. Few traders have F&O as their basket, so they are only going to participate in F&O stocks. There are traders which I have seen, they only participate in Nifty 100. There are market participants who only participate in Nifty 200, maybe Nifty 500. So this becomes your trading universe. Maybe you can have your own method or identification, a process in which you are going to participate in the stock. There are few studies which are written around participating or creating a stock universe. You can follow a traditional method of pre-selected basket, which is Nifty 50, 100, 200, Nifty 500 or so on and so forth. Or else you can have a technical basket. That means the stocks which are trading about 200 EMA. You're only going to participate in those stocks when they're bullish, plus whatever the price structure or the pattern you're participating in. There are studies which will help you identify the stock basket. Maybe you can identify relative strength as one of the concepts. The stock is outperforming or underperforming. If a stock is outperforming, you look for long opportunities in them. If the stock is underperforming, you look for shorting opportunity in them. So this is one of the studies. So when you have to create a trading universe, there can be multiple approach. One is a standard basket. You can select the kind of stocks you want to participate in, or you can have a technical basket. Maybe if there are some technical parameters that get matched, you participate in those kind of stocks. Or maybe you can create a third way, a third approach to creating trading universe. Maybe you can look at fundamentals. Maybe a fundamentally sound company you go long, fundamentally weak company you go short. So there are three approaches to creating a trading universe. When we come to a trade plan, the first step that you have to ensure that you are doing right is creating a trading universe. These are the stocks or the instrument in which you are going to participate. That's the first step, right? For any business, the first thing is what kind of business you want to do. If you are into logistics business, you know this is the logistics business and whatever you have to do, you have to do. If you are into an education business, you know these are the set of courses that you have to teach, or maybe what's the business of that. So you should also know the nature of your business, whether you are going to participate in options, you are going to participate in futures, and if you are going to participate with futures, which are the stocks. If you are going to participate in options, these are the instruments, these are the patterns. So one method is identifying the trading universe. This is the nature of the business that you are going to participate in. The next process, the next step is identifying what is the instrument or the pattern that you want to participate in. You have to keep one thing constant and the other variable. I'll explain you. You have to keep one thing constant. That means either keep the pattern constant or keep the stock constant. Any one thing should be constant. You cannot keep both the variables. कि मैं कोई भी stock में participate करूँगा, कोई भी pattern में participate करूँगा. That's the most dangerous thing as a trader we can do. We have to fix one thing. Why? If you are trading only index, maybe Nifty or Bank Nifty. For our example, let us understand Nifty. You are trading Nifty and your view is bullish, then every bullish pattern that emerges on the chart you can participate. That means a rectangle pattern, triangle pattern, all the bullish breakouts you can participate because your instrument is fixed and the trend aligned to that instrument is fixed. So once that is fixed, you can participate in every pattern that is getting formed. But if you have a basket of stocks, a trading universe, let's say you're trading in Nifty 500, you have 500 stocks, and if you keep participating in every pattern, you might get 500 trades every day. That's not how you do trading. You will have to fix one pattern that you are only going to trade rectangle breakout. Whenever the trend is bullish and you get rectangle breakout in any stock, you are going to participate, or else you'll leave that. So that means you're keeping any one thing constant. Either you're keeping the stock constant or you're keeping the pattern constant. That helps you manage the probability, because trading is the game of probability. In your trading, if your probabilities are not constant, your journey to become a profitable trader gets difficult. So you'll have to fix your probabilities first. Either fix the instrument or fix the pattern. That is going to help you keep probability in check. In trading, what we are doing is we are placing bets, and every bet has some certain outcomes and those favorable outcomes. So every outcome will be favorable or not favorable. Favorable means you have participated in the trade and the trade goes in your direction. It's a favorable pattern. So when we calculate probability, we are going to calculate what are the favorable outcomes in your favor, right? So it's a favorable outcome. More the favorable outcomes, more the chances that you have towards probability. But that's not the only parameter. The next parameter is every pattern or every instrument that you participate in, or whatever your trade plan or trade is and the trade idea is, every trade idea is aligned to one risk reward. That means where you are participating, what is the move that you are going to capture, and what is going to be your stop loss. So risk reward plays a very important role. Maybe you can have lesser accuracy of your setup but high risk reward, still you will be profitable. Maybe you will have higher accuracy but lesser risk reward, still you will be profitable. But having bad accuracy and a bad risk reward is very dangerous. You will have to fix this. So this will come, you will be able to understand what's the accuracy of your setup, what's the risk reward if you are able to journal your trades. So what's journaling? Journaling means whatever your experience is during the market, once you have taken the trade, what are the scenarios in which you took the trade, what were your emotional conditions, what were you thinking while taking the trade, how you feel or how you felt in the process when you were in the trade. Based on that experience, every day you write down some points. This is how I felt. I took a bullish trade, the stock went up by 3-4% and I was happy. Write it down, that I was happy that the stock was 3% up. The next day the stock gapped down by 2% and I had a panicky situation. Write it down. Okay, I had a panicky situation. Did it trigger your stop loss? Maybe not, right? But it created some kind of panic. So what you have to write is, this will help you keep a check on your emotions. Once you know that emotions are in check, you will be able to combat few situations. That ये तो stock में ऐसा होता है, ये these are the stocks which happens, right? So what you're doing is, you're documenting your observations, documenting the patterns, you're documenting your emotions. And trading is a game of mindset. And if your mindset is in check, you have higher chances of becoming profitable. So this is the process, this is the fourth step, which will help you keep your mindset in check by journaling your trades. And journaling helps you in two ways. One is with the emotions that you're in, what kind of emotions that you're going through, that's the first part. Second is, what is the risk reward you're able to capture, what's the profit you're able to book, what's the move you're able to book, versus what was your risk on the table. So this helps you identify risk, reward and accuracy. These are the two elements, right, that we want to manage whether you will be able to be profitable or not. So these are few parameters. There are few more parameters to it where you can check more ratios like Calmer and other, which will help you build your accuracy, but this is a good start. Just keeping a check on your accuracy and risk reward will give you a lot of insight. With that, you keep mindset in check. What kind of mindset do you have while participating in the trade, during the trade, and once you exit, what are your emotions? Because I have seen traders, they have captured good move. They have participated in a stock. They have captured a good move. I'll tell you an example. One of my friend was able to capture 15% move in a stock called Polycab. Captured the move. This was the highest move that he was able to capture. He booked the profit. After 2-3 days, the stock went up by another 5%. And over 2 months, the stock went up by 40% from the place that he exited. And he started feeling, अरे मैंने रखा होता trade तो ज़्यादा profit होता, right? If you are getting this kind of feeling, then you will have to go back to your trade plan and see what are the ways in which you will be able to capture a bigger move. If you are getting a feeling of regret, maybe you will have to check two things. Is it happening consistently that you are entering the trade and the move gets in your direction? Once you exit, it moves more faster. If that's the case, then you will have to figure out what are the ways in which you can capture a bigger move. If you're participating in a trade and the trade is reversing and it is happening multiple times, you will have to observe why it is happening. This will only come by documenting. This is what the journaling is. So once you start journaling, what you're essentially doing is you're trying to find the answer. You're trying to find your answers through your actions, through your emotions. Once you have figured out this, the next step that you have to go through and do the next thing is again recreate the trade plan. So maybe you'll again fix that this is the universe, this is the trading basket that you have. Do this need some changes? If yes, do that changes. It's not necessary that you only trade on predefined basket. You can curate your own basket. For example, I trade on stocks only if the stock is relatively positive. That means if a stock has a relative strength positive, I participate long. If the stock is underperforming or relatively weaker, I go short in those stocks. So relatively outperformance and underperformance is with respect to Nifty. If a stock is outperforming Nifty, I go long. If the stock is underperforming Nifty, I go short. And with the patterns, right? So pattern is the one essential criteria. So I've kept my patterns fixed, and the basket is through a technical basket. You can also have a trading universe which is combination of both. Maybe a technical basket and a fundamental basket put together. The first filter can be through fundamental basket, the other can be through a technical basket. So stocks which are doing fundamentally good, plus they are also relatively positive as of now, and you participate in the positive bullish patterns. Right, this is also one way. So I'm just sharing ways in which you can create a trading universe. You will have to experience, you will have to explore what works for you, because every trading method or every trader has its own way of trading the markets, has its own unique beauty. So you will have to figure out what works for you. You can learn different concepts. Having a good knowledge base is very, very important. Once you have a good knowledge base, you can keep building on them. So having a good base of knowledge, understand what is relative strength, understand different patterns, understand different charting methods, because charts at the end are the language that you have to understand, right? This is the language of markets. If you are able to read charts, that means you are able to communicate with the market. More languages you know, better you will be able to communicate. So maybe you can look at learning more charting methods, not just stick to candlestick, maybe explore Renko, maybe explore point and figure, Kagi, Hakinashi. At least learn 2 or 3 charting methods, because these are languages. If you're trading, this becomes your language connecting to the market, right? So the markets can speak to you, you can speak to the markets, you can understand what are the sentiments. Every charting method has its own beauty. So this is the way in which you can create a trading basket, a trading universe, create a set of process. This is the step 1, 2, 3 that you're going to do. And after that, you will be able to generate good returns in your trading. So these are few steps. If you follow it, is going to help you immensely in your trading career. If you like this video, let me know through the comment section. Post it what you like. Subscribe to the channel for more amazing content around trading.